What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and help you guys better understand the price action of NIO. I'm also going to give you guys my price prediction for the next trading day. I'm going to talk about where I see NIO going, what you should be looking out for from the Fed, and what on earth is going on with the latest FOMC meeting because it's coming up very soon and it's going to have an effect on the entire market. This is on everyone's minds right now, so I'm going to prepare you guys for what you should be expecting and what may end up playing out. Now, before I break any of this down, before I do any price predictions, I do have to mention a couple of very important things first. The first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You are guaranteed 5 free stocks, each worth up to $2,000. Once again, that's free money, and you could always sell those 5 free stocks for cash and use that cash to buy some NIO shares for free. This is a limited time offer that ends in just a few weeks, so please check it out to get your free NIO shares. With that out of the way, let's get on with the video. So when we look at what's going on with the entire market, at the time of recording this, there's a lot of red all over the place. And obviously, this is typically what happens on Fridays. Maybe not like every single day for the last decade or so, but generally over the last few weeks, this is what has been happening, right? If we look at the SPY is in a very, very key zone as of right now. Because if you go to the 3 month chart, you could see the way this thing has been dropping, right? This thing's been dropping pretty hard, finding its support, trying to get that bounce off that 410 range. And right now it's not looking too great. And I do see a potential pullback kind of continuing as we are preparing for the next FOMC meeting. So what's going on with the markets? Let's actually talk a little bit more about the macro perspective, because when you look at the SPY, if you look at what's happening, we hit our all-time high. That was like near the very beginning of this year, at the very start of January. And since then, we've been just dropping and dropping and dropping. And people are talking about a potential market crash, this and that. And from the way I see it, as of right now, if you are trying to call this the market crash, yes, we're dropping back, but it's looking more like a major pullback and less like a market crash, because if you compare it to previous crashes, we're not seeing, an insanely vertical drop over a short period of time. We're actually kind of bouncing between these support levels, and it's not the end of the world just yet. So don't lose it just yet. What's happening is we have the FOMC meeting coming out. So the Fed is going to be making some big announcements. If you actually don't know what that is, the next FOMC meeting is on the 3rd through the 4th of May. So during that time frame, right, the Fed is going to announce what's the change to their monetary policy. They're going to change their different policies and also their open market operations. So this is going to be important for us because this affects how our economy is functioning. It's going to affect interest rates, mortgages, how the monetary supply functions, our money velocity, all those things that affect our economy. So the Fed is doing this because inflation is going through the roof, and this is on everyone's mind right now, because if they raise interest rates at a high rate or higher than we anticipate, the market could take a massive hit. But I don't necessarily see it that way, because the guy that's kind of on top, his name is Jerome Powell, uh, as the chairman of the Fed, he has had a history of being quite dovish. That means that he doesn't like kind of rug pulling us too hard. And what I think is going to happen is he's going to make some changes. He has to be a little bit more hawkish than before, because he essentially has to do that because of inflation. But I don't think he's going to surprise us. And he knows that he does not want to crash the market, especially considering the fact that midterms for the US are just many months away. They're less than a year away. I don't see why he would crash the market insanely hard. By a crash, I mean the S&P crashing all the way down to the 300 range, back to the 200s. I don't see that happening just yet. And from the way I see this, I think that we're going to see a 50 basis point rate hike. If we get that 50 basis point rate hike, then as a result, the market's not going to get rug pulled extremely hard. But if he surprises us, which is very unlikely, it's probably going to lead to a big crash, but I don't see that happening. So what's going on right now? Right now, the market is pricing in the rate hike. So we get a 1% total hike. The first one was obviously the first rate hike was 25 basis points. The next one right now, it's probably going to be 50 basis points, but we already priced in over a 1% rate hike. So if you think about it, the drop is already priced in, and going into the FOMC meeting, the market's already quite red. So what does this mean for NIO? Where is it? I have NIO right over here. In my videos from before, I told you guys that I saw a red Friday. That is what we're seeing as of right now. The market's about to close at the time I'm recording this. And what I think is going to happen is for Monday, I think it's going to be kind of a sideways day. But when the meetings start, which would be between Tuesday and Wednesday, that's when the market's going to take a big hit. I do think there's going to be a big drop, and it is going to take NIO down with it. But once that's priced in, once the market sees the certainty, because the market loves certainty, things are going to be a lot better. And I do expect NIO to get that nice bounce right after. So before I go into more details about the prediction, just give me a few more seconds. Look at this right here. This is UBS giving us an estimate on the CPI data, and you could see they think that the 8.5% reported hike was the peak. And since then, because we already got the first interest rate hike and our GDP, I think, was already negative for the quarter, they are expecting CPI data to start decreasing. The rate at which inflation goes up is going to go down. And that's going to be a good sign if we start to see CPI dropping. Because if we get these reports that it's dropping and dropping and dropping, that's going to be a lot better, and the Fed is going to be less likely to rug pull us even harder. So what this means for NIO is this. Okay, here's the bottom line. Let me bring up, let me see, the 2-hour candles. With this, you could see, and this is just another example of these gaps getting filled. You could see this big gap that formed here. Obviously, NIO filled the gap. Once again, it just goes to show that gaps have a tendency of getting filled. They don't always have to be filled, but they do tend to do that. Typically they do that. There's a gap right here. I've been talking about this for quite a while. There's a gap. Where is it? Around right here. But typically stocks, they don't drop to where the wick is. So hold on. Let me fix this. It could take NIO down to that $15 range. So yeah, from the way I'm seeing it, I think before the FOMC meeting, the market's going to take a hit going into it, which is just the 3rd through the 4th of May. And as a result, I think NIO is going to drop on those days, but obviously that's Tuesday and Wednesday. Before that, NIO could actually hold up kind of well, maybe not the best, but I would anticipate a bit of a pullback, kind of like this, because of the week. This thing could drop to that 16 range, very close to that low 16s. Then what I anticipate is a nice bounce. It's going to push up a little bit higher and perhaps close a little bit in the red, a little bit above $16 a share. That's where I think it's going to close for Monday. And it could be a little bit more red than that. We could be in the high 15s, but I don't think Monday is going to be that bad. I think the worst days are going to be that moment where we actually get into the FOMC meeting. So I do think the high 15s through the low 16s is where NIO is going to remain for Monday. By Tuesday and Wednesday, that's when I expect this thing to get pushed down lower. And then that brings me back to that gap fill I was talking about. NIO could fill that gap at around the high 15 range, maybe a little bit lower. It could start trading in the low 15s, and it's possible we fill the lower gap that could take us to the high 14s. So be on the lookout for that. But then after that, I do expect NIO to see a nice move to the upside after, and I do think it's going to be okay. So what NIO could look like from the long term, not the long term, I mean for the week, is NIO looks like this, trades sideways, then gets pushed down pretty hard. Be prepared for that. But then all of a sudden, the Fed's going to be like, oh yeah, 50 basis point rate hike. Initially, NIO may trade kind of like this, and then it should start to pop up right after alongside the entire market. So let me fix this for 1 second. So it could end up looking like this, get a slight bounce, and then in the later days of the week, going into the week after, I would expect NIO to start pushing to the upside after the FOMC meeting, kind of like this. And I do expect this thing to start pushing up and up and up back to the $18 to $19 range. So be patient. give this thing some time. For Monday, I think it's going to be kind of sideways. I do think NIO might close a little bit in the red, maybe around the low $16 range to the high $15 range, somewhere around there. But then Tuesday and Wednesday should probably be a little bit worse. We could end up dropping and filling those gaps one last time before we start to push to the upside, because we have some breathing room. Next FOMC meeting after the May one is going to be in June. And like I said, I do expect us to get some relief during that time frame. We have a month and a half of less activity from the Fed. And I do think that if we start to see inflation going down, CPI numbers improving, this could be a good sign for the markets and things should be fine. So be patient. I do think NIO is going to look kind of like this, get a bit of a pullback, but then it's going to get a nice bounce after the big rate hike is announced, because the market's entering it at such a low point. So I think things are going to improve. So, anyways, I want to thank you for listening. I gave you guys my prediction for Monday, and we could be a little bit red for the short term. Just know right now we're not trading based off fundamentals, it's just shorting, manipulation, what's happening with the market, and all of these things playing their role, but it's not the end of the world, because when you give this thing time, I repeat this almost every day. Give it time, this thing will come back. It's going to run, and this thing will break all time highs again in the future, in my opinion. So, non financial advice. I just want to thank you all for listening. Please have a great rest of the day, and I'll see you guys in the next one. NIO to the moon, and peace out.